Mozambique Central Bank leaving its benchmark lending rate unchanged at 9.5% for the first time this year. To analyse the bank's decision further, joined on the line by Antonio Sorao Franco, economist at Support Program for Economic and Enterprise Development. Antonio, thanks very much for joining us. So just looking at the benchmark interest rate, 9.5%. The Mozambique Central Bank made specific mention of the fact that there are concerns around the exogenous effects of what's taking place in the global economy. So do you think that there would in fact have been room to increase interest rates at this point in time? Or do you think that this decision really reflected a fact that there hasn't been any inflationary pressures coming through?
Thank you very much for having me. Look, Mozambican economy is very stable, and on the financial and economic point of view, the economy is growing extremely fast. Inflation is coming down. The central bank has been applying a very tight monetary policy. So interest rates, I think they might not fall that much, but they will not go up for sure, even despite the tight monetary policy. The country has huge volumes of international reserves, so the exchange rate is also quite stable. So my expectations really is that in the short run, the economy will grow fast. The inflation will be kept at the low single digits. Exchange rate is stable and not too much appreciation or depreciation. So, but interest rates will continue extremely high, and they will not, of course, favor economic enterprise growth.
So not favour economic enterprise growth. Of course, as you say, we've got interest rates sitting at 9.5%. And there was, all these supply side shocks last year. The floods hit the cost of food. So all these exogenous factors that they weren't able to control. But what do you evaluate the fact that they, looking more at inflation right now, and how do you see that opportunity cost coming through when it comes to not decreasing rates to the extent that it might stimulate credit extension into the real economy?
Look, one factor is that the stable exchange rate and the tight monetary policy, they really both have helped keeping the domestic prices quite low, and in particular inflation. The problem with the interest rate is all the companies in Mozambique really would love to have lower interest rates so they could borrow and expand their activities and new companies emerge. That probably is not going to happen, as it's extremely difficult for quite a lot of these companies to have good collaterals to ensure that they can borrow. And most of the banks, the commercial banks' activities is on financing import and export. So these are very fast turnover operations, and they are also taking government debt, very secure medium to long run assets. So, but on the other hand, this is not a deep change in the monetary policy. The interest rate is going down, so the private sector is realizing that. So it's not going down as they would like to stimulate their own growth, but it's going down, and so probably better days will come later in time. Of course, everyone would like a lower interest rate.